Good day everyone, welcome to Phillip Mastermind. Today, we'll dive into Trump's One Big Beautiful Bill and explore if it's a bold economic push or fiscal ticking time bomb. President Trump's so-called One Big Beautiful Bill is a sweeping budget package aimed at locking in his 2017 tax cuts and advancing core America First priorities. Supporters see it as a pro-growth move to cement long-term prosperity, while critics warn it could sharply worsen the already record high US debt, now at $36.2 trillion, about 125% of GDP. With key foreign buyers like China pulling back from US Treasuries in early 2025, the Fed has had to step in as a major big buyer. Against this fragile fiscal backdrop, the bill is being positioned by Trump and congressional Republicans as a once-in-a-generation stimulus to boost growth, reinforce tax relief, and assert economic leadership. Some major elements of the bill include tax cuts, which is the largest tax cut in American history. According to a White House statement, this means an extra $5,000 in American pockets with a double-digit % decrease to their tax bills. American earnings between $30,000 to $80,000 will pay around 15% less in taxes. Border and defense, that's to stop immigrants, and spending cuts in the Medicaid program. In addition to that, it intends to reverse Inflation Reduction Act, favoring traditional energy sources over green alternatives. On crypto stablecoins, though it's not the core in the bill tax, related proposals are in play. Congress is considering the Stable and Genius Act to regulate these stablecoins. For example, one version would require dollar-backed stablecoins to hold US Treasury bills as reserve, effectively making them buyers of short-term debt. For context, Tether's USDT stablecoin already holds over $100 billion in treasuries. The House narrowly passed the bill on May 22, 2025, 315 versus 314 votes. Senate leaders aim to finalize it before July 4th. Some spending cuts would phase in immediately, for example the Medicaid changes, while revenue measures like tariff hikes apply in their designated fiscal years. Without the bill, many tax cuts under the 2017 Act would have expired in 2025, raising taxes on 62% of taxpayers in 2026. The One Big Beautiful Bill Act is being framed by its proponents as a bold, pro-growth tax and policy package. It seeks to make the 2017 tax cuts permanent, aiming to avoid sharp tax hikes for individuals and businesses while maintaining low corporate tax rates. Additionally, crypto advocates have welcomed provisions requiring stablecoins to be backed by US Treasuries, a move seen as a win for both financial innovation and increased demand for US debt. However, critics warn that the bill comes at a significant fiscal cost. Deficit hawks argue the timing couldn't be worse, even before the bill. Federal interest payments were on track to consume a record share of tax revenue. Moody's recently cautioned that interest expense could eat up 25% of all federal tax income. By adding an estimated $2.5 trillion to $3.1 trillion to the national deficit over the next decade, mostly from tax cuts and reduced healthcare spending, the bill would require a substantial increase in Treasury bond issuance. This added supply has already shown market impact. 10-year Treasury yield rose by about 20 basis points following news of the bill's advancement, reaching 4.42% by the end of May. While models like Tax Foundations predicts a long-term GDP boost of around 0.8%, even after factoring in economic growth, the net addition to the fiscal could still approach $1.7 trillion. With that, interest rates are expected to stay higher for longer, putting downward pressure on asset valuations and limit the Fed's flexibility in navigating its future policy direction. Our view is that as we enter June, equities may face short-term headwinds from rising geopolitical tensions, stubborn inflation, and slowing global growth. Trade negotiations are still ongoing. However, a meaningful breakthrough appears unlikely before the 90-day tariff suspension expires on July 8, a key milestone that could trigger new policy shifts. In the interim, markets may experience economic distortion stemming from pre-tariff stockpiling, supply chain disruption, and decelerating growth, all of which could amplify earnings volatility. While some central banks have begun easing, The Fed has been hesitant to cut rates yet, even as the US economy shrank 0.3% in the first quarter, its first contraction in over 2 years, and a high US debt, $36 trillion. Although rate cuts could help underpin equities valuation, lingering trade uncertainties and uneven regional growth may continue to dampen investor sentiment. Against this backdrop, we emphasize the importance of diversification and a focus on quality amid volatility. As such, we believe Malaysia equities warrant renewed focus. We maintain a constructive outlook for second half 2025, supported by several favorable catalysts. Mid-single-digit earnings growth, combined with a solid dividend yield of approximately 4%, positions Malaysia as an attractive proposition for both income and capital appreciation. A strengthening ringgit and a reduced tariff-related risk could spur renewed foreign investor interest, helping to sustain upward market momentum. In addition, robust domestic liquidity and supportive government initiatives such as the NETR, NIMP, and the Johor-Singapore Special Economic Zone are expected to provide a stable foundation for selective investment opportunities. A noteworthy avenue for investors seeking diversification in their portfolio is through Phillip Capital Malaysia. Phillip Capital Malaysia offers multiple private managed account services managed by professional fund managers. By leveraging Phillip Capital Malaysia's private managed account services, investors can enhance their resiliency, optimize portfolio performance, and navigate the complexities of the market with confidence. Apart from our inaugural private managed account services, we also offer unit trust funds and PGWA that could cater to different investors' needs. That's all for today. Stay tuned for our next Phillip Mastermind. This update is brought to you by Phillip Capital, your partner in finance.